Yes, so hello everyone. Thank you for joining our first session in the series Why Global from Day One. We will discuss why founders should think about global markets from day one, what that actually means, and then also how to make sure that you don't lock your company into your first market. Probably this session will be especially interesting for early founders. So let's first quickly introduce ourselves and why we are doing this. Matt, do you want to start?
Sure. So my name is Matt. I'm also based in Sydney, like Sky and maybe a few others joining today. I spent about 9 years in Tokyo up until 2022. Who've been working through a bunch of different programs as a mentor, done some workshops in communication, entrepreneurship. I've run a few of my own companies in Japan and Australia. And now I'm kind of doing my own brand new adventure called GlobalDeal, hence the collaboration between me and Karen today. I'm also doing a 8-week sprint, which the deadline is Friday next week. If you are really looking to get started on your early stage founder, especially get started in the validation piece, really lock into the go-to-market strategy for your startup, especially before you build, or even if you build something, trying to refine what that looks like from the go-to-market point of view. We're running an 8-week sprint next week, and always happy to talk to people about that after this as well. So feel free to scan the QR code, or I'll share a link in the chat as well. Basically, it's mostly about go-to-market and how to think about the home market as the first or initial market, and then getting ready to expand that to your second market as well. So that's me. Karen?
Yeah. And I'm Karen. I'm the co-founder of GlobalDeal. I grew up in Germany, half Japanese, and moved to Tokyo after finishing university. I've spent most of my work life navigating between business cultures, and at GlobalDeal, that's what we do at scale. So we help companies execute market entry end-to-end, and a big part of my work is talking with startup founders who are trying to build traction overseas. And doing that work, the same challenges tend to come up. And a lot of them are actually things that people just didn't expect when they started. And so for me, the goal today is to share the most important aspects with you so that you don't make avoidable mistakes. Next slide.
Cool.
So here's a quick overview of the topics that we will dive into today. Feel free to interrupt whenever you have a question, and otherwise we will have a Q&A in the end. Okay, so let's get started with the first point.
Yeah, and I think just an important note, this is going to be fairly high level, fairly generic. We probably will have a little bit of time to dig a bit deeper into some topics if people have questions, but this is session 1, 2, so we will be digging deeper into a number of topics after this as well. So this is more like your broad, general intro. Over to you, Karen.
So the first aspect that I want to talk about is about the mental model regarding your company's future from the beginning. Global from day one is not just a growth strategy, but an architecture decision, because the way that you build your company from the start determines how easy or hard expansion will be later on. And because of that, the phrase home market, although it's commonly used and sounds neutral, is actually, it can have a negative impact, because the moment that you call the first market your home market, you tend to optimize for it. So for example, the tools that you choose, hiring, product decisions, and also the legal structure. And switching core systems later on, once you start looking into the next market, is expensive and some things are even nearly impossible to undo. So if you instead switch your thinking to initial market, you change the mental model, because this implies that there will be other markets later and that you need to design your business for that from day one. It's also important that when you enter a new market, treat everything that you think you already know from market one as a hypothesis that you need to confirm locally. That goes for things like customer behavior, then what kind of messages work well, also what pricing is appropriate. All of these kind of things need to be tested locally on the ground. Yep, next. The most actionable reframe that I can give you for everything we are about to cover today is this one. Treat your initial market as a minimum viable product. And by that, I mean not just the product, but the whole business. So the tools that you use, the way you sell, the legal structure that you set up, and also the team that you hire. All of it is a hypothesis about what works. And of course, some of this will travel across markets, but some of it won't. And the parts that don't, these are the ones that get expensive later on to undo. So this is exactly what we want to look into today. Let's actually see if anyone here has already had some kind of relevant experience to share. So who of you is already running a company, has started operations in at least one second market, and has something that they would like to share with us? Anyone?
So maybe feel free to put in chat if you want. Like number 1 means you're only in one market. Number 2 means you're in 2 markets, and maybe 3 means you're in 3 markets or more. Or 0 means you haven't started. Maybe.
It might be also most of you if we have a lot of early stage founders.
Yeah. Sky is not sure.
Feel free to share even if you're not sure.
Sky, you
to share
better testing in Australia, or is it?
Yeah, so I don't know what I guess how to answer that question. So because my product is still in testing, but I know my market exactly who they are.
Mm-hmm.
So is that 1?
Yeah, maybe 1. Yeah, that's fine.
Yes.
Max is 1. Christine live in Australia this week. Oh, all right, congrats. Good. Himanshu says 0, so maybe yet to kick off. Cool. All right.
So when you say market, is it like specific niche market, or is it territory?
Yeah, let's talk about country. I think we think about it as a territory.
That's country. What you meant. Okay, got it.
Yeah. Although, I mean, depending on the country, sometimes you have, for example, a lot of differences within the country, right? So one country doesn't have to be necessarily one homogeneous market. Like maybe in one prefecture, if things work in this way, in another prefecture, things are different. So yeah, if, for example, you say you've already tested in different places, even within one country, and you have discovered differences, I would say that also can count as different markets.
Okay. Yep. Got it. Understood. Thanks.
Looks like Kari has a question.
Hello.
Hi.
Hi. So where to start? So I established a company last year, and my mission is to make less people feel isolated. Yeah. And I am creating and building an app and community for women who need support, especially the mothers who have kids under 3 years old. And I am now creating this since last year, and my app was launched 2 months ago, and now I have users about 800 people within
Wow,
Japan.
congrats. That's fast.
Yeah, thank you. I'm still struggling how people like to connect to each other because of even though they have over 800 people registered, that doesn't mean that daily active users and monthly active users the number are high.
Mhm.
So I'm still struggling on this page, but right now about over 800 people registered within Japan.
Mhm.
So currently only Japanese only, but this digital health and mental health is a worldwide that I believe. And so I do have a plan to expand my business in other countries, especially where the government support is not good enough. Is this answering the question?
Thanks for sharing this. I think that's really strong that you were able to get so many users so fast, even if you say they are not yet that active. The fact that you were able to get 800 people to sign up, that already shows that there is demand for this.
Yes.
So I think that's quite a strong proof.
Mm-hmm. Yeah, I still do have many things to fix it here and there, but I believe there is a needs for the users to help to build connection, bring back like early 90s.
Mm.
Yeah.
Yeah, I'm really interested in the specifics of how your app works. So definitely let's connect after this.
Of course.
And I would love to hear more about it.
Yes, absolutely. Thank you.
Thank you for sharing this.
Cool.
Okay, so let's
Shall we
walk
move
through-
on?
Yeah.
Oh, you gotta. Yep.
Let's walk through how global from day one looks like. Okay. Wait, is this just on my side? Yeah. So every early company decision that you make can have quite far-reaching consequences for future markets. And it's often that by the time that you're starting to think about translating things, you already made most of the architectural decisions that determine how hard the rest will be. So let me explain two business aspects where it is especially important. One is tools and the other is the product. Every business runs on different platforms. For example, project management platforms, communication tools, or cloud providers as well. And if you build your internal operations on tools that are available only in your first market and that are just not commonly being used in other countries, then you will have to switch the infrastructure mid-expansion, which can be quite a struggle. So when you choose your tools, make sure that you're using those that are globally available. And then about a product, when you're building the product, keep in mind that you will later need to localize it. And by that, I don't just mean translating labels, but there could, for example, be regulation-related aspects that you need to adjust for the new market. Or if you offer multiple currencies, that means that you need to deal also with different currencies, different payment workflows, and also with a different tax logic. And when it comes to digital products, that means be aware of different date formats, number formats, right to left text, and also different character sets. And ideally, you want to be able to exchange feature sets by market without rebuilding the core. So of course, there might be parts that need to be like small parts that need to be built for a specific market, but you don't want to be rebuilding the core of the product. And these are engineering and product architecture decisions that you need to make at the start. And the same goes for the product name as well. So make sure that you choose a name that doesn't have an offending or negative meaning elsewhere, and it can be pronounced by a future global customer base. That's actually something that even many big brands get wrong often, that they choose a name, they don't do the proper research, and when expanding to other markets, they realize that this name doesn't work elsewhere, and they have to change it. Okay,
I think
next.
I'll just add for product localization. I think a good example is Starbucks. So Starbucks succeeded in entering multiple different Asian countries except Australia. So when you look at Japan, if anyone's traveled to Japan or if anyone's living in Japan or based in Japan, Starbucks does a really good job of localizing the product, not only for the market, but also adjusting their offering based on the season. And, they've localized it with, Japanese oriented flavors as well. So, obviously with the matcha and they change, summer now in Japan. So, they try to provide a bunch of different fresh flavors, for the summer climate. In Australia, when they tried to jump into Australia, they basically tried to come in with I think it was a little more the American style mentality. What they didn't realize was that Australia has such a very strong local cafe culture already that them coming in, they were basically already up against a very stiff or very competitive market already. Australians' coffee industry is worth more than 5 billion, I think, from now, and so it's massive. And Starbucks just struggled in the market because they struggled to localize their products in Australia. So it's an interesting case study when you look at it in Japan, in Korea. I think in several countries in Asia, they were able to localize for different markets, and they're huge success in cities like Seoul and Tokyo, but in Australia, it's a very different story. So, localization of the product is very important.
I think Starbucks is a really great example because it's also an example of how Starbucks understood that in Japan, because they knew it's a difficult market, they didn't even try to just do it directly by themselves, but they partnered with a Japanese coffee chain that already obviously knew the customer and what works in Japan. So through this partnership, they were able to just get it right from the beginning, and as Matt mentioned, offer these different tastes and also adjust the size of the drinks because US size is way too big for Japanese. Even the interior was adapted to the Japanese taste. So they did a really good job there. Okay, so next, Matt has a few more points on early stage decisions that have consequences for going global.
So there's a few things to think about when you're taking your product across markets, different markets. So when it comes to building your team, I guess it's very easy, obviously, to hire locally in your own home market. But what I've seen a number of startups that actually know that they want to expand into a particular country, they will often hire a very strategic hire in that country. So for example, a founder in Australia who knows that US is their next market that they want to jump into, they hire a CTO or a technical co-founder in the US. And then, of course, the time zone is very, very hard. But as someone who's worked across multiple time zones, you can make it work when there is a couple of hours overlap, whether it's in the morning or whether it's in the evening. So it's always good to think about even your really strategic hires. If there's a second market, if you've got product market fit in a particular country in your own initial market, your next strategic hire, whether that's in product, whether that's in marketing, whether that's in operations, whether that's in partnerships. Sometimes the next strategic hire could be in that next market that you're looking at. Obviously, when it comes to working across time zones, you're dealing with different cultures as well. And so the easiest way to make sure that you're aligned is to be really clear up front about expectations. It's almost like you need to have a really clear SOP, standard operating procedures from day one, even if it's very basic. But something in a startup, everything starts with a very rough draft, and then you refine it as you build and as you scale the team and as you grow. So when you are hiring, even if you're doing offshore developers, for example, when you're working with offshore devs, make sure that when you're talking to them, because they come from different cultures, their way of communicating will be slightly different. You have to make sure that you're setting expectations really clear up front. And you probably want to also nurture a really kind of open, inclusive environment so that people in other cultures felt like they're able to speak up if they, see a problem, if they want to make a suggestion, offer a better solution, for example, for a problem that's come up in the team. So when it comes to culture and alignment, never assume. It's always best to be clear up front about expectations so that you can align the team on common goals. And having some kind of overlap when it comes to even like a couple of hours, when it comes to working across different markets as well, if you have different teams in different countries, that always helps to just make it a little bit easier to organize meetings and to catch up, and obviously have company-wide catch-ups as well. So there's just a few things to think about there. Any questions so far? I'm keen to just check in there to see if you've got any questions currently. That's okay, Christine. I'll share the recording with you after this. Okay, maybe we'll move on.
Yep.
Yep. So another one to think about is obviously legal and operations. So legal, I guess it really depends. Maybe a good example I want to give is if you're a company in Japan, typically you'll set up a KK or a kabushiki gaisha. It's typically called a KK in Japan. And that enables you to be able to raise funds. But that usually only works for Japan. If you want to raise in the US, then it's probably a Delaware. So when you're thinking about the legal entities that you're creating, it's always good to think about, is this something I want to bootstrap? Yeah. If so, then perhaps my current legal structure is fine. If it's something that you're going to go to other countries to raise funds, then you probably got to think about, is this where I'm actually going to base myself? Am I going to move my HQ somewhere because it's more tax advantageous for me? There's a whole bunch of considerations to think about, especially depending on how you plan to scale the company. So obviously, if you want to relocate to a particular country, especially your HQ, you'll need to think about visa as well. You need to think about, obviously, how much money you'll need in terms of setting up. You probably need to make some local hires there as well, just to support you on the ground. So there's a lot of considerations to think about, just more broadly speaking. When it comes to operations, so I think some of the things to think about are obviously currency. So if you're trying to build a global company, it doesn't mean you go straight to US dollars from day zero or day one. I know that if I'm an Australian customer and I go to a website, and I know plenty of Australians are like this, and they see a US dollar on a Aussie website, for example, they probably think, something's wrong, or it looks a bit scammy. Sometimes you've got to make sure that you're localizing the currency, for example, for a given market, because sometimes that can come off in a kind of deceptive way, or people will lose trust in the brand, in the offer. Another thing to think about is just also how you're invoicing. So if you're doing B2B setup as well. So, are you invoicing locally? You can use Stripe. I use Stripe for some of the work that I do in Japan. Whenever I send an invoice to someone in Japan, I'm localizing that into Japanese currency. So it's usually just something to consider, especially if you're working across borders. Okay, so we've got a question from Toolkit. Can you see that, Karen?
Yep.
So what's the preferred legal structure if founders are across borders? Yeah, I mean, it really depends what you're trying to do. Like I said, if US is where you want to be, people will typically set up a Delaware just so that it makes it easier to deal with VCs later on down the track if they're looking to raise in the US. I'm pretty sure you can set up a Delaware even if you're not in the US. I don't know the exact details. I can always get that for you. But if number one, it really depends on where your HQ is going to be, I think. And number two, then what is your strategy for future fundraising as well?
Yeah.
So I know there is some companies, for example, in the US, when it comes to Japan, if you have a KK, there's some VCs in the US that will invest in a KK. But there's probably plenty VCs that won't because they don't see that as locally accessible. They don't see the trust. They don't see that you're making the effort to build an entity in the US as well. So I think you've just got to be careful when you're having conversations with VCs. Understand what are they looking for? What is their tolerance in terms of do they invest in overseas entities or not? Do your research as much as you can, but also be upfront, ask them questions as well.
Yeah, I think that there are actually a lot of things playing into this. So it's very important, and you need to map out all the aspects that are important to you and the reasons of why you want to be in a specific market. And because yes, you can incorporate in Delaware even without being there. You can just do it remotely. But if you do that because you want the money from the US VCs, you also need to be aware that the IP needs to be on that Delaware C Corp. So it doesn't just work to have like a kind of shell company, but the operations are, for example, not in the US. And also the IP is in a different country. Let's say you have a KK in Japan, and that's actually running the operations. You only have customers in Japan. The IP is on the Japanese KK. You set up a Delaware C Corp because you want to fundraise from US VCs. Usually they will not invest in a Delaware C Corp that doesn't have the IP and also that doesn't have any customers yet in the US. What were the other questions?
But yeah, just Pulkit once again here. Sorry, I wasn't able to speak earlier. So based on your suggestion of, if we just set up the Delaware in US and, we don't have any customers, VCs are a little bit reluctant. But how difficult is to, let's say, we have let's say this Japan's example of, we have a entity in Japan, for example, how difficult it to convert later on, let's say if VC is interested in a product, but later on, but they say that, you need to convert that into a Delaware. How difficult is that at that time? Converting from one local to, Delaware structure later on?
So it depends on why exactly you want to do that and how you want to do that. Because as I mentioned, US VCs want to see traction in the US before investing. If you go to them and you say, okay, you already have customers in Europe or in Japan, that's not going to be enough for them unless you have a really, really massive customer base. And then also regarding the IP, where's the IP going to be? And that's not just about being fundable, but also, for example, if you look at the US tariffs, depending on what kind of product you have, you want to carefully think about if you want the IP to be in the US or not. And there are a few more aspects that I'm actually going to talk about when it comes to the fundraising part in a bit. So maybe some of your questions will be answered then. But yes, this is really a question that a lot of founders ask, and it's very important that you think about this early on.
Yep. I think it's also important that you're clear about what your direction is. Like, so if you're building in Australia, for example, if you're building in Singapore, okay, what is the next market that I'm going to go to? So you've got to think about the entities that you're incorporating as you go as well. So if US is where you want to be next, then obviously Delaware is probably the go-to. If Japan is the first first or second market, then you're probably building the KK first, and then you're going to the Delaware. So you've got to also got to be clear about your trajectory as well, like what's first, what's second, what's next.
Yeah.
So, Matt, question.
Yep.
So with my particular example, I'm obviously setting up in Australia, but my product service can be instantly distributed around the world instantly. But obviously, I'll strategically, aim for US first and then other countries. But even then, it still can be accessed globally anyway. So for me, do I need to set up a headquarter in every
I think
country,
it only matters if you're trying to raise in that market. Like if you just want customers, then it doesn't matter, right? Because they can find you anywhere.
Okay, that's what I meant. So specifically for that, is there a thing where VCs from US come to Australia and invest in companies? Because I hear a lot about that as well.
I mean, yeah, it's increasing of late. You're starting to see more. But, typically when you raise anyway, you typically need a lead investor.
Yes.
Especially if you're going for a seed or a Series A. So typically you'll need to find who is that lead investor, and then others will join. So if the lead investor is in Australia, then you may be able to convince a VC overseas to join. But yeah, if you're looking to raise abroad, Karen can tell you about Japan, especially because she's based there. But so it just depends where you're trying to raise. And Karen's covering a lot of this later. So
okay, cool. Thanks.
Anything you want to add, Karen? Or
I think I'm gonna cover a lot of it on the next slide, and then whatever is not clear yet, I would say let's move it to the Q&A, because this is a topic that there are a lot of aspects
of questions
you need to cover, including things like trust, and then it plays into where do you want to first focus on when it comes to the customer base. So okay, cool. So let's talk a bit more about fundraising then. Because the market that you target first also shapes a lot where you can raise capital. And as the questions already showed, the US is very popular when it comes to fundraising, because that's just where most of the capital is, and you can get the highest valuation there. And so many founders hope to raise funds in the US. But one very important point is that the structural logic behind US venture capital is different from many other places, and it's important to understand this. So US VCs need each portfolio company to at least have the potential to return the entire fund. And that means that they need massive outcomes. So if you want to convince a US VC to invest in you, the expected founder commitment is also extremely high. And if you value some degree of work-life balance, opting to fundraise from the beginning in the US is maybe not the best idea. And also because it's very competitive, VCs often require warm introductions. So if you just do cold outreach to a US investor, that almost always ends in no response, which means that in order to raise capital in the US, you need US relationships. And relationship building takes time. And so you should not start building them when you're running out of money, but before that. When we look into Europe and Asia, it's a bit more varied there because grants and co-investment schemes with public institutions play a bigger role in the overall investment mix. But then, of course, getting those grants is also tied to some requirements regarding local entity, because oftentimes when you want public money from government-related institutions, that means that you also need to have a local entity. So if you, for example, say you want some specific EU grants, then you will need to be located there as well. And that's an entity structure decision and not just about where to get the money from. So it's another decision that you need to be careful about in the beginning. Okay.
If you look at there's a startup called Firmus. They were based in Australia originally, but they've relocated to Singapore. And I think it was mainly to raise funds. They're very capital intensive startup because they build AI data centers. And on a smaller scale, but still very capital intensive because it's deep tech, it's hardware. But they moved to Singapore for two reasons. One was for probably the tax advantages, but two is because it's a much more mature VC ecosystem over there. And they have pretty easy access to US capital as well. There's a lot of investment firms from the US that have a rep office in Singapore too. So when it comes to like legal entities, sometimes it makes sense to relocate to a different country because sometimes it's easier to raise funds there too. Firmus is one of Australia's most recent unicorns as well. So if you're interested, look them up. They've got an interesting story.
Yeah, I just saw Corey's comment that she is planning to establish a Delaware C Corp and keep the current Japanese entity. So yes, that's a very common pattern. I think a lot of founders are doing that, especially if you start in Japan. But then, yeah, the question is why? The reasons for setting up this Delaware C Corp, if it's for fundraising or because it's just the next big market that you want to target. There are a few more aspects that I'm gonna talk about. So if you still have questions after that, let's feel free to ask during the Q&A. Okay. Yeah, so this is just a really rough overview of the different fundraising rounds because I'm gonna mention some of these words and I just want to make sure that you understand what it means. So you might have, for example, heard terms like Series A or seed round, and that's just how the stages of fundraising are called. And you typically start with a friends and family round while you are figuring out the market. And then the seed round is often the first institutional ones where you have VCs in the mix as well as angel investors. And the focus at that stage is on the go-to-market strategy and driving the product development. And then from there onwards, in the later stages, it's about scaling the customer base and operations and expanding to other markets. This is really a very rough overview, and there are a lot of details and a lot of exceptions too. But yeah, this is just to have a rough understanding of how this works. Okay,
I guess maybe the moral of the story is always do your research on the investor first to understand what they're looking for. Because pre-seed for different investors means different things. Sometimes it means traction, revenue. Sometimes it's just a team with an idea. It can vary depending on.
Then also depending on the country, the size, for example, of
the valuation.
Yeah, varies a lot depending on the country. Yeah, let's go next. Yeah. So here are three very rough major paths that I want to talk about. But obviously there are a lot of other options possible, and there's also not one single right path. So the right choice depends on a lot of aspects like your team, the visa situation, also existing relationships that you already have, and then how much runway you have left. And there are always exceptions. So path 1 requires full US commitment. That means a physical presence, a US entity from day 1, and also US hiring. And this also often means that you have to relocate, so you should make this choice very carefully. Then path 2 is probably the most common and realistic ones for many founders that are based in, for example, Japan, Australia, or Europe, who want US capital. And that is, you first build traction locally, and then you come to the US with proof. So for the first raise, you can either raise from a local fund or deliberately choose a US fund that also has a local office in your country. Then path 3 is to go for a local seed and A round, and then scale operations to the US. And once you already have traction in the US, raise the next round there. This gives you more time to build a product, and it also makes the US raise a bit easier. At the same time, it's difficult building US relationships from the distance. So I think the practical point is that you need to be aware of which path you want to choose before you start talking to investors. And whatever option you choose, the timing of when you start building investor relationships matters a lot. So this is, next slide, please. So this is probably the most actionable part in the fundraising section. It might seem logical to approach investors when you're about to run out of money, but at that point, it's actually already too late, because the problem is that especially in early stages, investors typically invest in people because your product is not yet 100% ready. You don't yet have a lot of traction to show. And if it's about investing in people, it means that there must already be an existing relationship with that investor. And you usually don't build trust in a single meeting. So it's best to start investor relationships before you run out of money. So how do you then first approach investors when you don't ask about money? So the easiest way is to ask, for example, for the feedback on what you're building. Because in general, people are a lot more receptive to conversations from strangers that ask for some kind of advice and a perspective instead of money. And then that's something that Matt just mentioned before, but it's also important to carefully think of who to approach, because every investor not every investor is a potential investor for your company. And that's because investors usually have some kind of focus, like a specific industry that they invest in, or also just a specific stage that they invest in. Let's say you're building a health tech company and you're approaching an investor who invests only in growth stage consumer goods startups. Then you might be wasting your time if it's not their investment thesis. So just make sure to research the investors that fit your company's industry, and then make a list of those and approach these. And then if you had a successful meeting with an investor, then that's great. But it's important to make sure that they don't forget about you. So keep that contact warm. You can, for example, just send regular updates whenever you have any news to share about new customers that you have, or any updates on the product side. Or for example, send greetings for holidays.
I think I'll add one more point. Never assume, so if an investor has experience in a particular vertical, in a particular sector, never assume that that's the only thing that they invest in. Because investors typically want to spread their portfolio across probably a couple of different sectors just to diversify. And I've spoken to plenty of investors in the past, and someone from finance, is interested in biotech. Someone from biotech is interested in deep tech. Someone from the energy sector, is interested in consumer goods. So I think, as much research as you do on a person, it still doesn't beat having a conversation. So you can do as much research as you want. You can do as much background check. You can ask people that know them about that person, but nothing beats speaking to that actual person and asking them specifically, directly, what is it that you do invest in? What are you interested in investing in? So just another point to add.
Yeah, I guess it goes especially for angel investors.
Yeah.
Angel investors are more flexible in general than institutional VCs.
Probably take on more risk as well in the early stages. Let's move on. So Visa's probably pretty self-explanatory. I guess my point is do as much research as you can, especially if there's a country that I think, obviously we talk about the US a lot as most people's end game, but it doesn't have to be. You can move to plenty of different other countries that probably have also a good lifestyle, perhaps are cheaper to live. Probably you have access to, a lot of amenities, and quality of life can still be good. So just because the US is kind of thought as the end game doesn't mean it needs to be. But when you're thinking about any particular country, visa obviously is very important, especially if you expect to stay there, for a couple of years, or if you want to base yourself there. There's many ways into a country. It doesn't have to be visa. Of course, it could be, hiring a country manager, employer of record, building partnerships or distribution partnerships with people locally in that particular market. There's many ways in, but visa obviously is a key consideration if you're thinking about relocating yourself as the founder into a different market. Language, again, is probably pretty self-explanatory. Countries like Japan, Japanese is probably almost a must if you're trying to do business there. Otherwise, you need to hire someone that's bilingual or fluent in Japanese at least. Credibility is a big one. You build for your home market or your initial market starting off. And obviously you're building all your social proof, your testimonials, your case studies for one given market. So when you're starting to think about what is the second market, then you need to think about, how do I start to build something there? Obviously you can do outreach, but maybe some of the other ways you can get warmer intros into a second market is if you think about, is there any local accelerator programs I can join? If I have an investor, do they have any leads or any people in their network based in that country? Is there anyone in my network that can help me find someone in that market? So always think about, when it comes to credibility, obviously you're building for one market initially, but when you're ready to expand, use your network to really find a way in, a warm way in, because that will then help it just to make things a little bit easier when you try to build a proof of concept for the next market. Any questions there? I think that's pretty clear.
Hi, here.
Hi,
wanna
yes.
ask you a question. So, about a month ago, I was really looking into establish a company in Delaware for C Corp, Delaware C Corp, for the fundraising. And what I was facing was that, where should I put my address for the contract to establish a company in C Corp, Delaware? And I got some informations that most people put their addresses in Miami or California. Not much people put the address within the Delaware. Is that true?
Yeah, so you don't have to be physically located in Delaware in order to set up a Delaware C Corp. But so if it's for fundraising, but you're not planning to move there, especially if it's for fundraising, I would advise you to wait as long as you can. Because if you wait, then by the time you ask investors for money, the Delaware C Corp will be younger, right? Let's say for now you're actually first focusing on getting traction in Japan.
Yeah.
You already set up Delaware C Corp now, and in 2 years you want to focus on customers in the US. By the time you go to US investors, you barely have traction in the US, they will see a 2-year-old startup that doesn't yet have any progress in the US. So that's not good. Because of that, I would wait as long as possible. Also because it has an impact on if you can enter the US, especially if you have already set up everything, like including the bank account and so on, and the address. You might not be able to enter the US on an ESTA anymore. And if you have to first get a proper business visa, then it just makes things a lot more complicated.
Oh.
This is a topic that we can discuss a lot about because I'm kind of in the same situation. So happy to talk with you about it separately. There are a lot of really important things to think about. So
Absolutely.
feel free to reach out. I know that we are already connected on LinkedIn. So
Okay, well, I'll talk to you later then.
yeah, that's it.
Thank you so much.
Cool. Okay, we don't have much. Okay, sorry.
Yeah, we don't have much time, so I'm gonna go very quickly over this. So this is about the go-to-market strategy, which is a whole set of decisions. And you need to make them for every single market and cannot just use the same go-to-market strategy for every market. I think that's the main message. The reason is that, for example, in many markets like Japan, you practically cannot enter without a local partner. This, of course, depends on what kind of product you have, but just be aware of the market and map it out, like who are the distributors, who are the ecosystem connectors, do you need any institutional relationships, and who holds access, just to be sure that you know the go-to-market strategy that you are coming up with works in this market. Then the second one is the channels. There's a big temptation to just start the same way that you did in the first market because it worked so well. But then it often turns out that the channels are different. So for example, in many Western countries, if you're on B2B, LinkedIn is a really strong one. And it's easy to reach relevant people there. But in Japan, many people are not using LinkedIn, even younger generations, unless, I would say the people in LinkedIn that are using, in Japan who are using LinkedIn are bilinguals or people who work for an international company. So yeah, just be aware of the channels and do your research. And then when it comes to defining the success, that varies a lot depending on the country. For example, in Japan, success in year 1 might be having 2 signed pilot projects and 3 warm introductions, while in the US, that wouldn't be enough. In the US, success would be, for example, several paying customers in the first 6 months. So be sure you understand how the new market works and what success should look like for you. Okay.
Cool. All right. Don't want to spend too much time on this. I think there's probably a lot of people using Wise here already. They're a big success story from the UK. Basically, it was people from Europe that moved to the UK. They were already dealing with two currencies. They built a product to help them bridge that gap. There's plenty of other examples like this out there. Safety culture is a big one from Australia. I think everyone knows the Canva story. But when it comes to companies that tried to go global and perhaps didn't succeed, or even just fell into the trap of defaulting to the home market, I mean, a good example is Timey. So if you're in Japan, you may know it. If you're not in Japan, you may not know it. But it's the typical case of a founder, very successful, mind you, very successful story, built the product for the home market. He initially was joining international pitch competitions. He had big ambitions, but ultimately he IPO'd in Japan and raised enough money to get $1 billion valuation. So it's still a massive success story. But for someone who was so ambitious, I had worked with him maybe 8 years ago. It's interesting to see that the majority of that product is still operating in Japan. And just by default, it's quite easy to raise, to IPO in Japan. And that was the pathway that he took. So it's still a great success story, but for someone that was so ambitious, I'm surprised he didn't try to take it beyond Japan's borders. If you look at Timey today, a lot of people are talking about Timey and the gig economy. It basically connects hospitality or like casual or positions, maybe a one-off position for today. You can apply for the job there and then get paid the same day. It was a very innovative product back in 2018. It's still, quite innovative if you look at how the labor market works in Japan today as well. Yes, so there's plenty of examples out there. Happy to talk about this in more detail if you want to chat about going global after this, but I think it's time for Q&A. So if anyone has any questions, now is the time. You can feel free to type it in the chat or speak now. Feel free to connect with us as well. I'll give you my LinkedIn in the chat. If we're not connected already, feel free to add me. Karen, you might want to share your LinkedIn in the chat as well so people can find you after this.
Also, if you just type in my name, you will find me because, there are, I think, as far as I know, there's no one else with the same name on LinkedIn coming up, but here is the link.
And if you are interested, Karen's product also helps with GTM is one aspect, but there's a lot of other stuff. If you're looking very early stage and looking to think about your initial market and go beyond that, I'm always happy to chat about the sprint that I'm running as well.
Yep. Yeah, okay. Thanks for everyone for joining today. And we will have a next session that's gonna be about how to choose your next market, because that's not very straightforward and many people get it wrong. So a very typical choice is to say, I want to go to the US next because it's the biggest market, and if I win there, I can win anywhere. But that's actually not the right way to choose the next market. And we're gonna go into the details of how to choose and why. What kind of aspects to consider here.
Yeah, and we'll probably explore a little bit of each market as well, the advantages, how you can get in there as well. So cool. All right, thanks everyone for joining. Hope it was beneficial. Hope you got something out of it. We're keen to get some feedback too, so we'll probably send a email around after this going around, so please give us feedback to help us improve these sessions for next time. If you'd like to connect up for this, feel free to reach out to me or Karen as well.
Thank you.
Awesome. Have a great night and weekend, everyone. Speak to you next time, hopefully.